The one stock which has been trading at a fresh high has been Dr. Reddy's after the company launched the Dacogen generic in the US. And clearly a thumbs up coming in from the entire street, a whole host of upgrades as well trickling in. Darshan joins in with more details. Darshan.
Well, clearly, Aisha, the stock is trading at its lifetime high, hitting even 2,400 a while ago. So clearly, there seems to be a lot of momentum over the past few days. More than 30% return from the start of the year. So clearly what has happened is on Friday they went ahead and launched the Dacogen generic in the US market, which is a $260 million market for them. And you know they have been approved, they have launched this product. So at this point of time it's a limited competition product. So they will have close to almost 12 to 18 months of exclusive period of going ahead and selling and marketing this drug, which is a big factor for Dr. Reddy's. Today a couple of reports have come in. Out of them, the notable one was UBS, which has raised the target price to 2,700 from 2,500. So 2,700 is one of the highest that any analyst in the street has given to Dr. Reddy's. What they're saying is the fact that they've also upgraded the EPS for FY14 by 5% and 3% for FY15. What they're saying is that, you know, at this point of time, valuation is attractive. What Citi says that the launch of Dacogen is extremely positive and the drug revenues will stabilize at almost $30 million every year. Morgan Stanley, meanwhile, says that this will get in $70 million annual revenue for the company because of this launch. And Kotak says that, you know, since this, you know, they expect more launches to come in and they believe that, you know, new launches will aid the near-term revenues of Dr. Reddy. So it was a launch and a couple of brokerage reports on the target price increase that has actually caused Dr. Reddy's to propel higher in trade today.
That's Dr. Reddy's there in focus for, you know, stopping that counter. Thanks for that, Darshan. Let's in fact get a word from the management as well. GV Prasad of Dr. Reddy's lab feels the rupee's recent fall is not necessarily beneficial in the short term. He also says the delays in getting more approvals from the US FDA has affected product launches, indicating that there is more of a pipeline there. He's also talking of markets that he believes will drive growth over the next couple of years. Here's an excerpt of the exclusive conversation with ET Now's Krishna Kumar.
Most of our hedges are around 56 to 58 range. So we have a policy of covering up to 2/3 of our net forex exposure for a year to 18 months. So that's the extent of the impact we have. So while the depreciating rupee is good for us in the long term, in the medium term, the hedges don't allow us to take full benefit of that.
Okay. Now the US markets have shown strong sales growth, but the sales for DRL has come in below the $800 million which was projected. So what is the kind of growth that you're seeing in the US markets?
So the growth in the US market is very tightly linked to product approvals. So as and when we get approvals, the sales start and, you know, add to the growth curve. Some of the approvals I think have been delayed, and that's the result of, you know, regulatory processes with the US FDA. And other than that, we remain on track.
Okay. Which are the emerging markets that DRL is focusing on, apart from, say, Russia? You know, where is the growth going to come from?
So Russia is the big emerging market that we are in. We are about 300 million plus in Russia and allied markets. Other than Russia, I think the next tier of markets which will, you know, drive certain amount of growth, not a lot of growth because they're still small, but Venezuela, South Africa, to a certain extent Australia, New Zealand, and the next tier of markets would be Romania, Ukraine, and those kind of markets.